Let's get back to inflation a little bit, because that's what seems to be the end game here, right? They can either choose to print the difference when we look at the debt and how unsustainable it is, and that will likely create more structural inflation over time, especially if they have to run these massive fiscal deficits. Now, Lyn, I love this tweet you did a couple months ago where you just asked, imagine you live in a developing country with an ongoing severe currency devaluation problem. You want to sell your existing home, hold it in some stable liquid value, and then probably buy a different home in 2 years. What do you hold it in? And I know that you have some family and friends in Egypt that are kind of going through this right now. And so when you're thinking about that, maybe you can think about some of the replies that came from that tweet. But what are people supposed to do to protect themselves from this stuff?
Yeah, I put that as a thought experiment because so many people in developed countries don't think about money that often. Whereas people in developing countries have to think about it more specifically. And so a lot of people, when I asked that, I was basically, that was based on, as you pointed out, like I have family and friends in Egypt, and for example, some of them were trying to sell a multifamily property, it has some logistics to it because they're going to get dispersed and not all going to be able to buy a home at the same time, and they want to figure out, they want to be able to save that in a liquid form. And at the time, some of them were talking about saving it in Egyptian bonds. And this is before the big currency crisis happened. And I was like, you're gonna do what? You're gonna put them all in like Egyptian bonds? Like literally, you could get wiped out.
Yeah.
And so we were kind of exploring alternatives, and so it sparked the question months later that I asked on Twitter, and a lot of people responded, and they just said, like, I would hold dollars. So then I was like, well, where specifically are you going to hold dollars? Because, for example, there are periods where if you hold dollars in a Lebanese bank or an Argentinian bank in one of these places, they just get taken from you. The bank, the government or the bank says, okay, well, those are not your dollars anymore. We're going to give you a similar amount of pesos, to buy them from you at the official exchange rate, which is not the real exchange rate, and then you just continue getting inflated away. An alternative is some people turn to stable coins. Obviously, those have counterparty risk as well. The counterparty is outside of the country, so if anything, it's safer than, say, if you're sticking them in an Argentinian bank, but it's still obviously not ideal. You can do physical dollars, you can do gold. There's really no clean solution historically for people in this environment. And then Bitcoin is obviously a good solution, but it's still small and volatile, and so they have to incorporate that into their analysis. It's still a much smaller, more nation asset. And it just shows essentially that the world has a money problem which remains unresolved unless or until we see more of an outcome from this. Yeah. And it's just something that people in the United States and Europe and Japan just rarely have to think about. And this was around the margins, people that are paying attention think about it because cash savings are the interest rates are below the inflation rates. Same thing for most government bonds. There's even that period of negative nominal bonds that was around the world in kind of that disinflationary bubble. So people around the margins are kind of pointed in that, but people in a lot of developing countries experience it in a more like in their face way. You also see, for example, like in Nigeria, they launched their central bank digital currency. It had very, very poor adoption, something like sub 1% adoption after the first year. And now they're doing things like, tightening how much cash you can withdraw from an ATM. They've already severed crypto exchanges from their banking system, so it's very hard to get money inflows, into things like Bitcoin, stable coins, or, whatever kind of thing they want to buy. And so now there's kind of this peer-to-peer market where they pay a premium in order to get Bitcoin, right? And it's like, if you talk to a Nigerian, it's like, if you talk to an American, a lot of people will be like, yeah, like Bitcoin's the solution in search for a problem. Like, I don't see why people need Bitcoin. Whereas if you talk to someone in Argentina or Nigeria or Turkey or Lebanon, and they say, like, why are things like Bitcoin or stable coins or whatever useful? You get an obvious answer because they actually have this problem like every day, yeah. And it's staring them in the face.
Yeah, Nigeria has a really high Bitcoin adoption rate, and it's because they understand it, right? And that goes back to Parker, your piece, man. Like it's so volatile, and people are looking for a solution, and it's just because they don't realize that Bitcoin is the solution. And it reminds me of Jamie Dimon at Davos recently. He says, "Yeah, really, but how do you know it's going to stop at 21 million?" And that's kind of the key question, right? Like, why is it so important to understand 21 million fixed supply, Parker?
Yeah, I think, I was actually thinking about writing not a piece, Gradually and Suddenly piece, but just, something for Jamie Dimon, where the one observation I had of that is that implicitly what he said is that it is important, right? Because I don't think that it's going to stop at 21 million. So you're saying if it did, then that would be of interest. So let's first agree there,
Yeah.
and then part of how he described it was, how do you know it's going to end there? Where like almost like when it gets to 21, the clock's just going to keep running, and another Bitcoin. And it's this idea that I think that most people have, where it's like this running clock of, something linear, and not realizing, and I think I've been thinking about the right way to frame this, but it's that the 21 is enforced right now. And that if people actually understand the 6.25 Bitcoin that are issued in every block, that we wouldn't have to wait when Bitcoiners talk about how, and I think I even mentioned in the piece that the last small fraction of a Bitcoin will be mined in 2138, that we would know in the next 10 minutes if the 21 million cap could be exceeded. And that is what is not intuitive to most people, or that most people don't know. Certainly Jamie Dimon doesn't, because the way that he described it was, when we get to 21 million, how do we know it's not going to be 21 million and one? Well, the real answer is that in the next block that was solved, if it was 7 Bitcoin issued rather than 6.25, and the network accepted it as valid, then something's broken. We don't have to wait to 2138 to know. We know every 10 minutes either the fixed supply is being enforced or it's not. But it comes back to the point that it's like most people do not even understand that the signal is fixed supply or not, and is it credible. And first you have to get there, and then you have to start to develop a framework to understand why. And I think the point that you're kind of making here is that in many cases it's just real world experience, that if something is, it's fight or flight. If something is front and center, and your Argentine pesos, or your local currency in Zimbabwe, or your Lebanese, I don't know if it's a pound, Lebanese pound, if that is changing week to week in percentage basis, where you're having to decide, what do I do right now, because the consequence is next week it's not going to purchase me anything, then you're going to react based on common sense, right, rather than reason and logic. But the common sense is just as valuable, and the real world experience is in many cases more valuable to you than kind of the academic rigor or the intentional intellectual thought. But that it all does come down to that, and that you cannot just arrive at that point magically. It's not just like some one sitting down for 60 minutes and thinking about it. But that everyone really does have to, either through lived experience or through some sort of primary education, has to get to seeing Bitcoin as money. Some people might get there from reading the Bitcoin Standard, or the Bullish Case for Bitcoin, or American the Bitcoin Dream, Inventing Bitcoin. Others will do it because their currency is falling apart and it's A or B, and the difference in choosing wrong is that you won't be able to buy some good or service that you need in a week or a month, rather than thinking out a year or 5 years or 10 years. And a lot of us have, in the United States, in the developed world, as Lyn was saying, have this luxury of, I think our problem is just as big, it's just not as present, but it's as big, if not larger, because we have a higher standard of living. We have more to lose, essentially. Because if you took somebody in the United States that had all the luxuries that we have, and you then had them live in the way of a developing world, like, having something and losing it is a lot more painful than going in the opposite direction. And so I think it's that the problem is just as big, it's just not as present, and so people feel like they have more time. But that for anybody in the United States, or anybody in Nigeria, or anybody in Argentina, the problem is the same. We're just at a different point on the curve, and the way that we might come to understand Bitcoin is maybe through a book rather than through a real live world experience.